The Eastern Caribbean Central Bank (ECCB) wants greater oversight of the process of who is being appointed to banking boards and boards of other financial institutions. Governor of the Eastern Caribbean Central Bank, Sir Timothy Antoine, has commended the Terrance Drew-led administration for its tabling of two banking bills, namely the Banking Amendment Bill 2023 and the bill to amend the ECCB Agreement in the National Assembly on March 7th, which will help to protect the financial system. While addressing media practitioners in St. Kitts and Nevis as part of the bank's 2023 country outreach mission on March 8th, Mr. Antoine said slow passage of legislation poses the single biggest strategic risk to ECCB's transformation agenda, while outlining several pieces of legislation that are yet to be put into place to protect the financial system.
It would be the Banking Amendment Bill. One of the things that that bill does is to clarify the fit and proper criteria for members who sit on boards of our banks or licensed financial institutions. I mean, there are deposits in the currency union of 25 billion. I don't have the number for St. Kitts and Nevis to hand, but obviously it's a few billions as well. National Bank alone, the size of National Bank is a $3.6 billion bank, the single largest bank in the currency union. It's very important, Mr. Williams, that the people who sit on these boards are fit and proper. They have the requisite skill, they have the requisite integrity, they have the requisite commitment to serve as board members and senior management. And one of the things that the amendment does is to require that people who are nominated to serve on these entities are referred to the central bank to ascertain that they are fit and proper.
Governor Antoine said that the amendment addresses the issue of people who have been discharged from bankruptcy.
That amendment also addresses the issue of people who have been discharged from bankruptcy. Because right now, under the Banking Act, if you have had a business has failed, and you've been declared bankrupt, you are essentially banned for life from serving on a board of a financial institution. That life sentence is a bit harsh, and that is not, and that is.
So is it because you have proven that you're not able to manage your affairs, and so you went bankrupt?
Well, you may be bankrupt for several reasons. I mean, some people went bankrupt because of the pandemic.
Yes.
That's totally beyond their control. So best practice is that after a period of time, once you have been formally discharged, there's a legal process where you are discharged as a bankrupt, you can be considered again. So we've modernized the law to reflect those realities. So obviously, if you're not fit and proper, and again, when you're assessing, you look at all of these things, business, police record, standing, a range of issues to determine. But if a business fails, for whatever reason, over an extended period of time, there ought to be a way back, a path back. And the law also provides for it.
Several other bills and regulations have been proposed by the ECCB to be tabled in the St. Kitts and Nevis National Assembly or to be put in place to protect the financial system, including the Eastern Caribbean Central Bank Agreement Amendment Order, the Banking Licenses Regulation, Banking Abandoned Property Regulations, Payment System Rules, amendments to the AML-CFT legislation, the Eastern Caribbean Securities Regulatory Commission Agreement Bill, and Investments Fund Bill. I'm Andre Huey for SKN Newsline.